The Suez Canal Authority to sell a stake in its subsidiary, a Bahrain State fund to buy McLaren shares from Saudi's PIF. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Egypt's Suez Canal Authority is planning to sell a 20% stake in its mooring and light subsidiary in an experimental offer. It's part of a government initiative to support the private sector. But Suez officials say selling or leasing the canal itself is out of the question. The Suez Canal Authority saw record revenues of $9.4 billion in the current financial year ending June 30th, up from $7 billion last year. Officials say 25,887 ships passed through the canal this financial year. Bahrain State investment fund Mumtalakat is buying shares and warrants worth $510.48 million in car maker McLaren from Saudi's public investment fund and Ares Management. The purchase will expand Mumtalakat's majority stake in McLaren Group, which includes the British supercar maker as well as McLaren Racing. In July 2021, global investment firm Ares Management and Saudi's PIF provided much of the $701.57 million equity investment in the McLaren Group. French energy giant ENGIE has been granted land in Oman for its $7 billion green ammonia plant in the Sultanate. The plant will export 1.2 million tons of green fuel to South Korea by the mid-2030s. The project consists of 5 gigawatts of new wind and solar energy, batteries, an electrolyzer that can produce 200,000 tons of hydrogen per year, and dedicated hydrogen pipelines to transport the gas to an ammonia production facility near the port of Duqm. Abu Dhabi's ADNOC and AI company G42 are reportedly in early talks about a possible flotation of their joint venture technology firm AIQ. AIQ is 60% owned by ADNOC and 40% by G42. It uses AI and machine learning to optimize processes, improve planning, and increase profitability for ADNOC and the wider oil and gas industry. The company is being considered for a possible IPO at the end of the year. They're discussing whether to offer shares internationally or exclusively to domestic investors. Bitcoin rallied for a third straight day after hitting its highest level since mid-April, boosted by BlackRock's plan to create a Bitcoin exchange-traded fund. BlackRock, the world's biggest asset manager, filed last week for the exchange, which would allow investors to get stakes in the asset class. EDX Markets, a crypto exchange backed by Citadel Securities, Fidelity, and Schwab, has started operations. Bitcoin is up 81% this year and was trading at $29,990 this morning. U.S. stocks closed lower overnight as Federal Reserve Chairman Jerome Powell's congressional testimony reinforced the central bank's objective to rein in inflation as he hinted at further interest rate hikes. All three major U.S. stock indices notched their third straight daily declines, with mega-cap tech and tech-related shares weighing the most. The Nasdaq closed down 1.2%, the S&P 500 lost 0.5%, and the Dow lost 0.3%. Barclays downgraded its rating for Tesla from a buy to a hold, sending the stock plummeting to its worst trading day in months. Barclays advised Tesla investors to move to the sidelines, explaining the stock's 170% rally over the last 6 months is too rich. Barclays says Tesla's nearly $300 billion in added market cap over the past month came due to surging valuations and not due to a material change in earnings expectations. Tesla shares slid 5%. And those losses are reflected in the Forbes RealTime Billionaires ranking, which tracks the daily ups and downs of the world's wealthiest people. Elon Musk is our biggest loser. He's down $9.7 billion overnight, and now with net wealth of $236.2 billion. Our second biggest loser is LVMH's Bernard Arnault. He's down $2.1 billion with net wealth of $225.2 billion. And our third place loser is Alphabet's Larry Page, down $2 billion with net wealth of $102.6 billion. Check out our website and our social media for all of the latest Billionaires news. And staying with Alphabet, Google has reportedly filed a complaint with the Federal Trade Commission accusing Microsoft of tricking customers into contracts. Google alleges Microsoft uses the licensing terms in its Office 365 productivity software to lock customers into separate contracts with its Azure cloud server business. This isn't the first time Google has gone after Microsoft with with antitrust agencies. Google reportedly urged European regulators to take a closer look at Microsoft's anti-competitive posture earlier this year. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.